I would say right off the bat, the reason why someone should not do an exchange is they want to get out of real estate as an asset class. They decided they want other investments, alternatives, whatever it is, but they decide real estate is not where they want to be.
So Scott, I want to take that expertise and I want to go back, right? It's 2003, 4, 5, 6, 7, right? We're doing the 1031 exchanges. People are building wealth. It's high fives because the values keep going up. At what point is it not a good idea to do a 1031 exchange? And if you had a chance to go back and do the Monday morning quarterback, I'm curious, would you have just sold everything at the peak, paid the tax, and reset the depreciation when the values dropped? What would you have done knowing what you know now?
Personally, I'm a little biased on this, Brett. I'd be hard pressed to not continue exchanging. So you brought up correctly, the one disadvantage of a 1031 is you're carrying that basis over. So unless you're exchanging up a lot in value, you're not going to get as much depreciation. So that is the negative. I would say right off the bat, the reason why someone should not do an exchange is they want to get out of real estate as an asset class. They decided they want other investments, alternatives, whatever it is, but they decide real estate is not where they want to be. That person, it might make sense to sell, pay the taxes, whether it was done now or in the early 2000s, take that money and move it into other investments. When you look at the time value of money, if you like real estate as an asset class, and I think most commercial investors like real estate, that they're deep into real estate. If you're going to keep reinvesting into more property, it rarely makes sense to not do a 1031 exchange because, as you know, you can exchange for one property. Well, you can do that over and over and over again. And then under today's tax laws, when you pass away, your heirs get it with a full step up in basis to the fair market value at the time you pass. So you've essentially not paid capital gains throughout your entire lifetime. You've got all this highly appreciated commercial property. You pass it on with a full step up in basis. Your heirs don't pay it. So to me, it's always advantageous to do a 1031 exchange as long as you're staying in real estate. What I would say probably makes sense to look at is to dovetail doing a 1031 with maybe a cost segregation study, right? Get the 1031 benefits for deferral when you dispose of an asset. Now, when you own an asset, you may be reclassifying, you pull some of that depreciation forward to today. I think, you're having me go back in history. If I look at where we're at now and I look forward, I think inflation is going to be with us as a variable we're all going to deal with. So if I can take my depreciation today and due to the time value of money, get more depreciation right now in 2023, that's better than me taking it over time, over that depreciation schedule. Now I use that tax savings to go out and buy more commercial property. I'm going to get ahead, I think, by combining those two strategies. So do you have any thoughts on that, Brett, from your viewpoint?
I love all of that. And I love using cost segged and especially with bonus depreciation this year, which is 80%. And I like what you said that if you wanted to stay in real estate, and you'd stay in real estate.